on 31st October at 11 a.m. as we discuss the power of quality in the process of investing. Send in your queries using the hashtag AskBQ to bloombergquint.com. Write to us now. Use the word Ramdev in all your queries.
Hello and welcome to Bloomberg Quint Live. I'm Alex Matthew. Here are the headlines. Indian markets are absolutely flat on expiry day. The Nifty hovers around the 10,300 mark. Oil marketing companies are among the top Nifty gainers after UBS initiates coverage. Most PSU banks are off the day's high. IDBI, PNB and Union Bank maintain their gains. And Yes Bank is likely to report a healthy second quarter. Management commentary on the RBI penalty is awaited. And now it's over to Darshan Mehta for Hot Money.
Thank you, Alex. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Before we start on the show, let's talk about M&M Financial. It was down in trade but has actually moved up significantly after the management held its conference call. The numbers were not the best, but right now trading with a positive bias. The vice chairman of the company, Ramesh Iyer, is speaking with us on terms of what kind of recovery he sees, what is the impact that is seen, what actually happened as far as this quarter is concerned. So he'll be speaking to our reporters in a while, but let's listen into what kind of conversation he had with my colleague Ridhima Saxena in terms of how the quarter went by and what he expects going ahead.
While we've registered a 14% AUM growth, we are not a significant player as far as heavy commercial vehicles are concerned. While we are there, we are doing a number 3-4% market share out there. But we do see that as a growth story for us in the second half. We do see pickup in the tipper sales. We do see pickup in the construction equipment sale. And with a low base, we would definitely get the benefit of growth coming from there. But as otherwise, our growth is constituted from a product mix range. We are a very significant tractor financier, and therefore tractor sales has been very healthy. That's benefited us. I think we are also a very significant car financier. That's benefited us. We are a very significant UV financier. That's benefited us. So it's a good product mix. We are a pre-owned vehicle financier. That's benefited. But I think more than all of this, we are present across the country in every geography, and that's benefited us as well. So I think the overall AUM growth comes to us from geographical penetration as well as multi-product approach. And we don't see any challenge in as far as AUM growth going forward is concerned.
So talking about the geographical spread of the company, since 2016, if I'm not wrong, there hasn't really been any expansion when it comes to the number of branches. So do you plan to grow the number of branches any further, or what is the strategy there?
So if you look at, we are on records to say last about 2 years, barring this last 3 quarters, we've always said that we are more focusing on asset quality, recovery, because the rural market wasn't doing too well. And when you're focusing on recovery, you honestly don't need more branches per se, but you need to be more closer to customer on the ground. So therefore, we've not really added much branch in the last 2 years, you're right. But clearly, as we see growth return, disbursements picking up, etc., we would add more branches in the next couple of years. But at the same time, we are already present in about 330,000 villages of this country through our customers. And we cover about 85 districts, 85% of the districts across. So the need for more branches would be based on where the demand is, what the requirement is, how far are we from the customer currently, and therefore how do we go close to them. But we are also adequately investing in technology, which is an alternative to opening physical branches. So we do see customers using our digital platforms coming into us for business through that. And therefore, technology investment is a good alternative to a physical branch. So one should always look at us from both. How many branches, how are we penetrating, how close are we to customers, how are we investing in technology, and how do we get closer to customer. I think this would be our strategy.
Mr. Iyer, if you could also, since we are talking about the rural spread of the company as well, so you could help us understand the performance in the rural areas. And because this year we had a good monsoon, so what are some of the key trends that you saw in the recoveries and in the asset quality?
I think first and foremost, last year was a good monsoon. This year again has been an average plus. I think the rural sentiment has turned very, very positive. So one way to measure that is, are customers asking for high loan to value of the asset, or are they kind of bringing in good margin money? We have clearly seen they are willing to bring in 25-30% margin money, which means the cash flow is improved. Two, in our earlier visits, we had to visit a customer more than twice, thrice to pick up our installment because they paid part payments. In this round, we have seen less than 1-2 visit, we are able to get our installments. So I think the two clear cash flow effects are seen, from which I can make a statement that rural cash flows have improved. I think now if we wait for the November crop, and I reasonably believe the yield should be good, the support price would be average plus, so therefore it will be a good kicker to the cash flow. And then with a good water level and monsoons, I think even the February crop is expected to be good. So I think two back-to-back crops are good. I think rural will turn extremely positive.
Also, sir, when we talk about the rural performance, how would you expect the rural performance or the good performance that you've seen so far in the insurance subsidiary and in the rural housing finance to continue in line with Q2, or do you see some change that will come?
So clearly, rural housing has registered a profit growth of 73%, asset growth of 35-40%. And they have huge potential. We are still very small in terms of the overall potential is concerned. We are not in all states present. I have no hesitation to believe that rural housing will grow at the same pace even for the next couple of years. So far as insurance broking is concerned, on an average in a year, we kind of mobilize about 1,500, 1,700 crores of premiums, larger than many insurance companies. And again, it's a very, very closely synergetic business with the Mahindra Finance customer, rural housing customer, dealers, suppliers of M&M, the whole ecosystem. So, these are all intermediaries, and therefore they'll continue to play a significant role, provided you have adequate knowledge, you have the penetration, you have a product that's well designed to suit the customer requirement, and you have phenomenal service standards. I think we have all of that, and therefore this business will continue to grow.
Okay, that was the management of Mahindra and Mahindra Financial speaking on their numbers. But we start with hot money. Joining us on the show today is Senthil Manikadam of Newberry Capital, T.S. Harihar of HRBV Client Solution, and Avinash Gorakshekar of Joindra Capital Services. Today on Hot Money, we will discuss stocks like Tata Elxsi, RBL Bank, PNB, SAIL and Jain Irrigation. Let's start with the first stock, and that is Tata Elxsi. Came out with strong numbers in trade yesterday. Revenues were up 6% on a quarter-on-quarter basis. Profits were up 15%. Margins strongly above the 20% level. It's slightly expensive. It is trading at rich valuation. But post the strong quarter, should someone play in for this niche play called Tata Elxsi? Let's ask our guest. Hari, I'll start with you. Any view on Tata Elxsi? Firstly, how did you find the numbers, and what's the story ahead for Tata Elxsi?
The numbers prima facie appear to be good. I don't think there are any problem with the numbers. So we need to understand that if you look at Elxsi over the past probably 3 to 4 years, this stock has rallied phenomenally, I think almost 15-16 times over the time period. So I think definitely there is some kind of a tiring out that we are seeing in the stock. Now, having said that, we like this stock for a couple of reasons. Reason number one is that they happen to be in a very niche space as far as the digital arena is concerned, and I think that should hold them in good stead. Secondly, the bigger bet we are taking on Tata Elxsi is that the Tata Group's technology properties are getting restructured, and we may see a gradual realignment where Elxsi may come in, Tata Com may come in, where TCS may come in. I think that realignment should be instrumental in getting some more value explosion as far as Elxsi is concerned. So we do like Elxsi. We have a target of 1,000 for the next 6 months, and we'll look at scaling up the target gradually as you go ahead.
Okay, what about you, Avinash? Do you agree with what Hari says? Do you like Tata Elxsi?
Yeah, Darshan, I think, Tata Elxsi operates in a very niche market, that is the embedded product development space. And I think here, 3 key elements of their strategy have been the automotive sector, the broadcasting and the communication sector. Automotive is going to hold extremely solid potential going forward, because we believe that automotive electronics, which used to be hardly 2% about 7-8 years back, is now gradually increasing. So obviously that is going to be a big growth area. Plus they are looking at medical electronics, they are looking at Internet of Things. So obviously, these are two growth engines which would obviously pan out over the next 2-3 years. In terms of the business model, it's a pure service delivery model, clearly with very little capital intensity. So the business is very lucrative. Our sense is that with a very strong balance sheet, virtually no debt, having about 300 crores of cash and decent margins, we could look at a decent kind of earnings over the next say 2 to 3 years. And I think with ROEs of 40% plus getting sustained over a period of time, I think any dip in the stock should be used as an opportunity to buy.
Okay, what about valuations? Are you happy with the valuation?
See, I think
it's not trading.
No, it's not trading. It's not trading cheap, Darshan. But if you look at the track record of this company, last year they declared a 1:1 bonus. Dividends have been pretty good. And if you look at the visibility of the earnings, I would believe that they don't operate in the typical software space. So yes, this year we are looking at earnings of roughly about 40 rupees. Going forward in 19, we would look at a EPS of roughly 52, 53. So earnings are not cheap. But if you look at the growth opportunity over the next say 2 to 3 years,
but they haven't been able to scale up their revenues. It's been rather muted. Or if you see the last 4-5 quarters, it's been very muted.
Yeah,
they haven't been able to.
Yeah, that point is right. But I would believe that I think probably medical devices and the IoT segment is something which is yet to play out. So I would believe that this is not a stock which can be ignored. Yes, evaluations are not extremely cheap and earnings have not been all that great. But if you look at it from a portfolio perspective, I think the stock can deliver good returns. I think you need to give it a little more time.
What about you, Senthil? It's a 2 thumbs up on Tata Elxsi. Do you agree?
Yeah, it's another thumbs up from my side. So if you see the entire IT space, currently the larger IT companies are facing pressures in their traditional businesses. So I think now we have to focus on niche companies in the mid-cap space. So Tata Elxsi is one among them. And if you see the return metrics, ROE of upwards of 30%, debt-free company, dividend payout. So fundamentals are strong. And business also, if you look, automotive is 50% of their revenues. And healthcare, they are just in the investment phase. So once healthcare comes into the picture, so like the revenues can see some upwards of 15 to 20% growth.
Okay, that's why you're bullish. Hari,
Yes.
my only thing is Tata's initially they had a similar company CMC, and there were a lot of business in which TCS was also had a similar business, and they decided to merge it, and they took off some of the business from CMC.
Sure.
That was one of the issues. So is that a concern that you would have, because TCS is also very strong in the auto division?
Yeah.
So how would you play TCS versus the Tata Elxsi? Is still would you be comfortable with the Tata Elxsi?
See, the answer is clearly yes. TCS, we do believe that it's almost become like an elephant now. At 4,70,000 crores of market cap, it's not going to be easy to give great returns. So TCS, I think, a great company, but probably I think it's going to be a very, very slow mover.
No, I'm not asking your view on TCS. I'm saying because TCS also operates in the auto segment, is it not cannibalizing your own brand? Or
see, I think that is where the realignment that Chandra is talking about becomes a lot more relevant. Because today what's happening is, there are 7 companies and each of them are getting into the same business in some different form. So I think once the realignment happens, I would believe probably the automotive and the medical business that TCS is into and the auto and medical business that Elxsi is into, I think they could be realigned, combined into one single entity.
Okay.
So I think that would be, as I said in the beginning, that is where the real value for Elxsi could come by.
Okay, so it's a consensus thumbs up from all our guests on Tata Elxsi currently. Let's move on to the next stock, and that is another company which came out with the numbers after market hours yesterday. Strong set of numbers by RBL Bank. The counter is reacting up almost 3%. Not one of the cheapest bank, even if you see the peers. It's trading at a price to book of almost 3.5 times compared to a Yes, which is trading at 2.5 times, or a Federal, which is trading close to 2 times. Should one stay invested in RBL Bank, or are there better opportunities? We'll ask our guest. Avinash, I'll start with you. RBL or some other private bank?
No, I think Darshan, you're right. On the valuation side, the stock has actually moved up pretty swiftly. But if you look at the quality of assets, you look at the other metrics like the loan book and the advances growth. In fact, the Q2 has been extremely robust. A 39% growth in the NI and a 68% growth in the bottom line. Asset quality has also remained stable. So I would believe that looking at their performance up to now and their vision statement for 2020, where they have said that they are confident of a 30-35% growth in advances, ROA of almost 1.5%, plus all other metrics remaining very attractive. I think the markets would be willing to pay a premium for this bank. Clearly, it's very small now, so the base effect has to play out. I would believe that this bank has not to be seen from a short-term perspective, but from the next 2 to 3 years horizon. I think one could visualize what was HDFC Bank initially when used to trade at very peak premium valuations. So the same thing applies for RBL Bank. As long as asset quality is in check, I would definitely be confident to bet on it over the next, say, 2 to 3 years.
Would you give a premium, Hari, to RBL Bank?
I would. In fact, RBL happens to be one of my top picks as far as the private banks are concerned. And I agree with you, Darshan, that 3.2 does prima facie look expensive if you compare it with the PSU banks. Okay. But if you compare it with other private banks, leave out Axis and ICICI for the time being. But if you compare it with, let's say, the IndusInds, the Kotaks, the HDFC Bank, I don't think that's looking very expensive at 3.2%. And let's look at the growth. I think 68% was the growth we showed yesterday. NPS absolutely under control. And this is a company that has been strategically acquiring. They recently acquired the large part of the India business of Royal Bank of Scotland. So they have been gradually doing a lot of acquisitions quietly. And I think more importantly, the asset quality, they have managed to maintain it at around less than 1%. Yes. So I think that is where this bank probably scores. And ultimately, I think private banks in India are the big play on the India consumer story. And I think you can't really find a better bank. Don't look at it as what RBL is today. Look at it as an IndusInd 5 years down the line or HDFC 10 years down the line. I think that's probably the way we should look at RBL Bank today.
Okay. What about you, Senthil? Do you have a view on RBL Bank? Are you bullish, or do you prefer some other bank in the private space?
So like RBL, we are neutral to bullish. Because neutral in the sense because of the valuations like you mentioned. But if you look at the banking industry as per se, like in the last 20 years or 10 years or 5 years, it's been the HDFCs and the S banks and Kotaks have created wealth. If you look at the common theme among them, there has been a key person who has been in charge in the bank, who has taken the bank across the cycles. So RBL Bank, if you last 7 years back, 2010 when the new management took over, their deposits and advances were in the range of 1,500 crores. Currently it's around 30,000 crores. So we bet on the management. As Phil Fisher mentioned in one of his quotes, when you are evaluating a common stock, management is 90% and 9% is industry and 1% is others. So I think with evaluating the banks, it's a management that plays a crucial role.
So would you prefer some other bank in the private space, or which is your top pick in the private banking space then?
RBL and Yes Bank would be my topics.
Okay, those are the banks. So it's another consensus buy that's coming in on RBL. Hari as well as Avinash are rather bullish. Senthil is neutral to bullish on RBL, but he says that RBL and Yes Bank, both of them would be in his top picks for the private banking space. Let's move on to the next stock currently, and it's actually the stock of the day yesterday. Today also in the morning session it was up 10%, it's up just 2%. A 50% move in a single day. In the last 2 days it's moved almost 60%. Is there more steam left in PNB? Let's ask our guest. Senthil, do you prefer, do you think that there is more steam left now in PNB, or would you avoid PSU now?
So it's a wait and watch policy with respect to the PSBs. So if you look at the economic survey was put up in 2015-16 period, they mentioned 4 R's. One was recognition, and second one was resolution, and third one was recapitalization, and fourth one was regarding the reforms. So now the recognition of assets has been done as the AQR has been finished, and second one is now yesterday they did the recapitalization plan. So we have to wait and watch how this recapitalization going to pan out. And yesterday the bank has run up nearly around 50%. So adjusted book value is around 50-55 rupees. So the stock is trading at around 200 rupees. So we have to wait and watch regarding the PSBs.
Okay. Avinash, after the 60% move, still trading at just one-time book, fair enough for someone to take a call on PNB, or is it enough? No more steam left?
No, I think Pankaj, clearly, today being the expiry day, a lot of short covering could possibly come in this counter, because technically most of the PSU banks, people had gone short. So there is a technical element to the stock upside coming in today also. But overall, I would say that, if you look at the operational metrics in the previous quarter, they had done a lot of work in reducing the asset stress. And I think the management needs to be commended. I think clearly all said and done, hopefully, if the money does come in as fast as December 2017, this is one frontline bank where possibly there could be a lot of operating leverage and the asset quality could change remarkably well. So I am mildly positive on the bank. I mean, obviously, one should buy the stock maybe at a slight decline, because the stock has moved up by almost 50-60% in a matter of just 2 odd days. But there is a lot of value which is lying in the investment book of PNB. If you look at MetLife, you look at PNB Housing, you look at their stakes in ICRA, or for that reason, they have an 18% stake in UTI mutual fund. So probably these could be further elements where the asset stress could be reduced, if the value gets unlocked. So definitely, it's a buy on decline, and with a slightly longer term horizon, this is one of those banks after SBI I would be positive.
So SBI is your top pick in the PSB bank?
Yeah, I think clearly SBI still remains a solid bank. If you look at the asset quality, even before the recapitalization was announced, they had done their asset quality checks pretty well, and I would believe that probably SBI has potential to further get re-rated. I think probably numbers, once they do come in, you could possibly see a further re-rating in stocks like SBI and PNB.
Okay, what about you, Hari? Is there more steam left that is in PN? Were you surprised firstly by the move that happened yesterday?
Frankly, yes. I think a 10-12% is something I would have probably bargained for, but I think 40% was probably.
They opened only 15-20%.
Yeah, it was beyond our wildest imagination. In fact, in our morning note, we had written that these three banks could actually spurt by 10 to 12%, but 40%, frankly, I think we didn't imagine in our wildest imagination. But having said that, I think let's understand one thing: that what is the big bet in the market? The big bet in the market is that with all this recapitalization, eventually there will be credit growth. Now, that's still a big assumption. We are not sure whether credit growth will pick up, whether companies actually need credit. So if after all this credit growth doesn't pick up, I think the whole exercise is going to be an exercise in futility. But yes, having said that, today, as of now, momentum is in favor of PNB, and I think the only way I can trade PNB is probably wait for a small dip and then continue to buy. But I think selling PNB is out of question. I would still prefer to buy it on every dip.
No, but you said that how will this firstly, the recapitalization amount of 2 lakh crore was much beyond what anyone thought of. The market probably was anticipating 30, 40, 50,000 crores. Now 2 lakh is probably ex SBI, the entire market cap of all the PSU banks put together. So that is something that they have infused in the company. So that will in short, it's a financial adjustment. I agree to it. But still, that share capital comes in and they will be able to lend. So now if you're telling the banks only they will be able to lend, that is the way to kickstart the economy. So is there not... and still they're cheap, PNB 1 time, Union Bank 0.6 times, BOI 0.7 times, SBI, everyone trading 1 time. This is after the move. So does it make sense to buy any other PSU bank or PSU bank compared to a private bank now?
No, see, there are two ways to look at it. No, number one, I agree when you say that the amount of 2,15,000 crores is much bigger than what we anticipated. But let us understand that what is government bringing in? Government is bringing in about 18,000 crores. What are they going to raise in the market? What are they supposed to raise in the market is 60,000 crores. And the balance 1,70,000 is just an accounting adjustment.
Okay.
Accounting adjustment, I think it's in your hands. You can always do it at whatever time you want. So that is not a big deal. So the real fresh capital coming in is just about 18,000 crores from the government. The market, see, 60,000 crores, I don't know whether Indian banks are in a position to raise 60,000 crores unless, of course, you're going to ask LIC to take a stake in all these banks. That's a different ballgame altogether. But I think otherwise, raising that much of money is not going to be simple. So what we have today is 18,000 crores that the government is committed. That is the actual accretion in capital. The rest of that is just accounting adjustments. Now, again, all that is fine, Darshan. The big question is, after all these efforts, is the credit growth going to pick up? That is a question for which I don't think anybody has answers at this point of time. So if that doesn't happen, I think then the whole exercise, the purpose could get defeated of the whole exercise.
Okay, so that's the view that's coming in on PNB. No one's bearish on PSB banks now after the big move that is there. Despite the big move that came in, it's fair enough to say that none of our guests are bearish on the PSB banks. Before we move on, here's a quick recap of all the guest view on the stocks that we've covered till now. Okay, the next stock that we'll talk about is another buzzer, SAIL. It's up almost 40% from the recent lows. What exactly is happening? I don't know, but Avinash, do you know what's happening in SAIL? Why is it up 40%?
I think
it's up 11% today. So
I think, Darshan, if you look at the fundamentals of this company for the last 5 years, ever since FY13, I think in terms of operational metrics, it's gone from bad to worse. In fact, I remember in FY13, they had a return on equity of 8% and a return on capital of almost 12%. And now, for the last 2 years, they've made losses. So I would believe that, from an investor standpoint of view, unless there's a very big turnaround and investors really benefit, it's better to wait for some clarity before we, see, because this is also an FNO stock. So preferably, I would prefer to wait. And frankly, at these levels, when the stock is already moving up, I would prefer to, stay aside and wait for more clarity.
Okay, Senthil, do you know what's happening? Because see, I have what works for SAIL is pretty much rally in global commodities and trade below book value. I couldn't find anything else positive to write about SAIL. What explains this move?
I think 2 days back, Ministry of Steel has came up with a request to the SAIL management, every 3 months SAIL has to put up what are the targets and whether the targets has been achieved.
Okay.
And they've asked to ramp up the rail facility in Bhilai. So that's the reason I think the market is buzzing on the stock. And we are seeing that the rail capex is increasing. And currently SAIL and JSPL are the only two players in the long products division. But at the same time, I could prefer JSPL compared to SAIL because on the high cost structure of SAIL. So if you look at SAIL, SAIL's staff cost as a percentage of sales is around 15% versus 3%, 3 to 4% for the peers. So in the commodity sector, it's always the lowest cost producer will be setting the price. So my pick would be JSPL versus SAIL.
Okay. So you prefer, but what's your view on SAIL? Are you bullish or bearish on SAIL?
I'm bearish on SAIL.
Bearish on SAIL. Hari, do you have any view on SAIL? What exactly is happening? Is there some turnaround that can be expected on SAIL?
See, I don't think the market is really playing SAIL for a turnaround. I don't think turnaround appears to be the story anyway. And I agree with Avinash when he says that the financial metrics are quite questionable, and I totally agree. It's actually questionable. But I think what is probably working in favor of SAIL is two things. First, of course, is that over the last 1.5 years, the government of India has had a very, very favorable, I would say, regulatory position with respect to the steel industry. So there have been anti-dumping charges, there have been additional import duties. Now all this has been done to protect the Indian steel companies from the imports from China. So I think that has worked in their favor. The second thing is, I think the pickup in Chinese economy. I think China is going to grow at 6.8% this year. Look at the imports growth last month, I think 18% growth in imports. So I think there is definitely some green shoots of growth that we're seeing in China. And obviously China demands 50% of all the steel and all the commodity outputs in the world. So what happens to China is what matters. So I think that is holding steel prices high. So I think it is just these two macro factors, and I would believe that they will continue for some more time. So there is still upside left in steel. We may not like the stock fundamentally, but if you have to trade, you have to trade on the long side.
But if you're bullish on steel, would you prefer a SAIL or would you prefer something else?
Yeah, given a choice, I would still prefer a Tata Steel over SAIL. But I think prima facie, I don't see anything wrong in buying any of the steel stocks at these prices. It's more of a macro play that we're looking at.
Okay, so that's the view that's coming in on SAIL. Hari is bullish on SAIL at this point of time, but our other two guests are not on SAIL. Senthil does believe that JSPL would be a better choice at this point of time. And moving on to our final stock, and that is Jain Irrigation. The government is putting a lot of focus on banks. Probably steel could be one of the sectors that the government is looking at, that Hari spoke about. Irrigation focus is definitely on the cards for the government. They've spoken about it on various forums. And agriculture. Now agriculture is a big theme and would be the big trigger for Jain Irrigation, and it supplies irrigation and micro drip parts for the agricultural world. But is it a good bet to hold? Should someone hold Jain Irrigation? Senthil, I'll start with you. Do you like Jain Irrigation?
You're neutral on the stock because on the business side, like you mentioned, the government focus on the agriculture is huge, and they're like Jain Irrigation. If you see the segment wise, their micro irrigation revenue is around 50% of the sales, and they are also into food processing. So these are two huge segments which are a lot of opportunity size with respect to India is concerned. Because if you look at the percentage of drip irrigation in India, it's around just 5% of the arable land. But if you look at the financials of the company, last year they made a EBIT of around 700 crores, but their interest cost is around 450 to 470 crores. So if you look at the interest coverage ratio, it's like 1. So on the financial ways, I'm not just comfortable on the stock.
What about you, Avinash? Any view on Jain Irrigation?
I think I would second Senthil's views that the interest cost is a drag on the company's financials. But I think you have to look at the overall macro story. I think in MIS the management is very confident of a 20% kind of growth. Plus the project business, now they're looking at executing large projects where they've already got 2 to 3 orders. And they're looking at new product additions like getting into fruit juices, getting into spices with their own product brand. So I think the company is making a lot of efforts to reduce debt, reduce working capital. More importantly, if one were to look at it from a slightly longer term horizon, I think this is one unique play which is available at probably good valuations, provided one takes a 2 to 3 year kind of horizon. And yes, earnings growth, my sense is Darshan, could be very strong this year compared to last year. So interest cost is definitely one element. If that gets reduced, you're going to see a kind of a
how do you see that happening? Because the financials are weak, the return ratios are weak. They haven't done anything for the past few years. Agriculture has always been a theme. So is it a hope trade that people have on Jain Irrigation?
Clearly, I think that has been the pain point for most of the analysts, and I think the management has actually committed that by FY19 they plan to raise, repay about 300 odd crores. So I would believe that yes, I think unless we see that happening, maybe the stock may not get re-rated. But yes, this is definitely not a stock which is going to be not be out of action, because clearly agriculture as a theme is definitely going to be hot, and definitely MIS is an area where these people are market leaders. So probably one will have to wait and watch for a couple of quarters. But yes, return ratios could improve only after FY19.
Hari, your final word on Jain Irrigation. Is it a stock that someone should look at, or you yourself are bullish or bearish? What's your view?
No, see, we like the stock from a macro perspective, but I think at a very micro level, we are a little cautious, and we've always been cautious on Jain Irrigation for a couple of reasons. Number one, of course, I think the financial issues are well known. But I think I have been tracking the stock for about 12 or 13 years, and this story of drip irrigation has been going on for a long time, but somehow it never really fructified and never really translated into numbers. Number two, there have been some serious corporate governance issues with Jain Irrigation in the past, and that's something, we hold a little against this particular company. So if you're looking at agriculture, or I do admit it's a great story, I think there are probably better plays like a Rallis or a Chambal fertilizer or even a Phenolix, which I think can address the agriculture growth much better than Jain Irrigation.
Okay, so that's the view that's coming in on Jain Irrigation, our final stock. Avinash is bullish. Hari has a slightly cautious view but is bullish on the sector. Senthil is rather neutral. Before we wrap on the show, here's a quick recap of all the guest view on the stocks that we've covered. Hari, Senthil and Avinash, thank you so much for joining us on the show. With that, it's a wrap on today's Hot Money. Thanks for watching Bloomberg Quint.